We've managed to rope in one of the most influential economists in the world who's going to be taking us through why 2025 may just prove to be the most consequential year in our lifetimes as key shifts take place in various parts of the world. He's going to be discussing various global developments, the return of Trump, how a faltering European Union may fare against an emboldened US, the latest developments in the Middle East, the relentless rise of Asia, and his views on what all of these shifts could mean for emerging economies in Africa. Now, not only is he an economist who boasts a stint at the Irish Central Bank, he is adjunct professor of global economics at the School of Business at Trinity College, Dublin, an author who's written 5 bestsellers, a columnist for the Irish Times and contributor to the Financial Times, documentary maker and broadcaster, producing the David McWilliams podcast. So please join me in welcoming David McWilliams to map out the global context as he sees it.
Alicia, thank you so much for that lovely introduction. And I am just saying hello to you all in sunny South Africa from extremely cold and really chilly Dublin. So you guys are in a far, far better position than me. So we're going to talk about, and by the way, I hope to be down in South Africa. In fact, I'm coming down to the Franschhoek Literary Festival in May. So I hope to get a little bit of African sun and African levity and all that good stuff in the next couple of months. So let's talk. Alicia just said, you've talked about South Africa yesterday. Let's talk about the globe. So what I'm going to do is I'm going to take you through the way I see the world panning out over the course of the next, not year, not 2 years, but 5 or 6 years. And the reason is the following. I think that what tends to happen when people talk about economics is they tend to say, let's just look at the next 12 months. But that's not how the world works. We need to look at the world in a big, big cycle. Now, as Alicia said, I happen to think that 2025 is one of the most consequential years in all of our lives. And the reason is the following. It's that the world operates in long, slow cycles. And at a certain stage, a certain year constitute a turning point, a tipping point, if you will, when we're going from one cycle to another cycle. So I want you to see, look at it this way. Secondly, I want to start with a little bit of history, because the one thing we know about economics and politics and investing is that history repeats itself in reasonably predictable ways. So I want to look back in order to look forward. And finally, I also want to talk to you a little bit about human psychology, because investing is about, yes, valuations, yes, metrics, yes, real tangible numerical assessments of cost and profit, etc. But also investing is all about human nature. Why? Because we tend to follow each other. So let's just, before we get into what's happening in America, which is absolutely fascinating, or what's happening in Europe, which is crucial, or what's happening in Britain, which is also interesting, or Asia, or of course then back to Africa, let's take a step back and try and see the world in a historical context. Now, Vladimir Lenin once said that there are decades when nothing happens, and there are weeks when decades happen. And what Lenin was saying, and Lenin, whether you agree with him or not, was an extraordinarily adroit assessor of the political condition. And what Lenin was saying then was that sometimes you can go decades and things don't really happen. And then suddenly you live through these weeks when decades happen, i.e. when the things that are happening in those weeks are consequential for many, many years to come. And I don't know about you, but I always, in the last year, I get the impression we're living through those weeks. Every single day there is something new. Every single week there is something new. Those things are so consequential that they're going to change the way in which we see the world. Now just think about it, right? We have AI, massive technological change. We have the war in Ukraine, extraordinary change. We have the war in Israel. extraordinary, again, epoch-changing events. We have Trump re-emerging in the United States, Union faltering, all these things, all this news we're getting. We still have climate change. You're seeing those fires in LA. If nothing else suggests that climate change, which is going to be ignored in the United States, is a massive, massive factor. All the while, what we are seeing are events that are changing the macro, and they're all happening quickly. So what we're looking at is a period where the pace of change is accelerating socially, economically, politically, and to a degree, psychologically. Now, fascinatingly, our generation, which is living through these changes, seems to think that these changes are the big ones, i.e., no other generation in the past has ever lived through these changes, or certain changes which are a wee bit like this. But that is not the case, right? Every generation lives through moments of crisis, the sort of which we're going through now. And the question is not the crisis, but the real acid test is how do you react to these crises? That's the key. And in order to give you a certain sense of the world, you know those lists I just gave you, what's very, very difficult is to know where do you start to analyze these extraordinary changes. Now, if I was, let's say, a South African economist or a British economist or an American economist, I'd come today armed with, for example, the tools of the trade, the graphs and the stats and the maths and this, that, and the other, the PowerPoint presentation. But I'm not any of the above. I'm an Irish economist. And I'm only going to come here today armed with a little book of poetry. These are the poems of W.B. Yeats, who is Ireland's national poet. And the reason I want to talk to you a little bit about poetry, which is not always the way in which you start an economics discussion, is I want to read from a poem written by Yeats about 100 years ago. And the poem is called The Second Coming. And it's written against a background of a period of also monumental social, economical, political change. And Yeats, the poet, is trying to figure out the world. And he's trying to understand where things are going to go. And he writes this extraordinary poem in a little book of poetry called The Dancer. If poetry is your thing, have a look at The Dancer by Yeats. And what I want you to do is listen to the words of this poem and imagine it was written not then, but now. So this is The Second Coming by W.B. Yeats. And these are the words. Turning and turning in the widening gyre, the falcon cannot hear the falconer. Things fall apart, the centre cannot hold. Mere anarchy is loosed on the world, a blood-dimmed tide is loosed, and everywhere the procession of innocence is drowned. The best lack all conviction, the worst are full of passionate intensity. Now that could have been written today. Think of the words. Turning and turning in the widening gyre, the falcon, the dangerous thing, cannot hear the falconer. Things fall apart. The centre, that which we all valued and hoped that would be stable, cannot hold. Anarchy is on the streets. There's blood in the streets. The wars everywhere. And Yeats says this will happen as long as, or only if, the best people in society lack all conviction, allowing the worst people in society to elbow their way into the front and win the day. Now, those words were written 100 years ago. And what was Yeats trying to figure out? So 100 years ago, the crisis for our grandparents, at least in Europe, was the end of the German Empire, the end of the First World War, the end of the Ottoman Empire, the emergence of the Soviet system in Russia, and the beginning of the end of the British Empire. They were also dealing with technological change, enormous technological change, the emergence of electricity. Albert Einstein wins the Nobel Prize, ushering in the beginning of the nuclear age. They're talking about motor cars, urbanization, all these things, all these monumental changes that were happening. And what fascinates me isn't the fact that history repeats itself. 100 years ago and today, all these revolutionary transitions. It's also the fact that if you go and you look back at what the poet was saying then, things will fall apart, the center won't hold, there'll be blood in the streets, and you contrast what the poet was saying with what my tribe, the economists, were saying. Not just the economists, the military advisors, the civil servants, all those people who were paid to think about the future. And you think, what were they saying? And what you see is the economists at the time, 100 years ago, were saying, don't worry, after the First World War, the Germans will pay all the reparations, we'll go back to the gold standard, we'll start to trade, everything will be hunky-dory, we will revert to the mean, to what was the case before the war. And the poet said, no, we won't. Now, the extraordinary thing is the poet got things absolutely accurately. Within a year of that poem being published, Mussolini was in power in Italy. Hitler had had a coup in Germany, and Stalin ascended to the top of the Communist Party in the Soviet Union. So the poet predicted the future brilliantly. The economists got everything wrong. Now, why is that? And this is what I want you to keep in your head about analyzing the world right now. I believe the reason the poet got things right is that poets, artists, musicians, these types of people, they, at a crisis, give themselves the permission to think unconventionally. Now that is critical at a time like now. And if you think unconventionally, you see the future in a certain way. You allow yourself to imagine scenarios that the conventional mind doesn't allow itself. So the first observation about the world right now, and this is why I think human nature and psychology is so important to equip us to deal with this changing world, is number one, we need to think unconventionally at a tipping point. Now, the question I have for you now, for your company, for your team, for yourself, for whatever organization you're involved in, is, are we elevating unconventional thinkers around us at this moment of great technological, social, economic, and political change? Do we actually reward unconventional thinking? Now, my sense is we don't. And maybe the way to answer that question is to go back to see the way in which we reward thinking in the place we learn to think in the first place, which is school. And to get a sense of whether our societies and our organizations and our team reward the unconventional brain. If we go back to school, and I know it's a very strange thing, but you might be able to do this. Imagine, go back to school. Imagine the person. Do you remember the person you were at 13? I do. I remember the classroom. I remember the smell. Ireland smelled of damp wool. It's like the whole country smelled of a kind of damp sheep at the time, right? Very, very cold, very wet, very unpleasant. None of us, this is before Gore-Tex, wearing anything other than duffel coats. The place stank. But I want you to take you back to this classroom. I remember the very people who sat beside me in school. But I also remember one thing, which is the types of brains that were rewarded in school when we were young were the types of brains who had one form of intelligence. That was a linear form of intelligence, a brain that could absorb in information, and in the middle of the summer, in the middle of June, write like hell in a logical way. Now, that is one form of intelligence. But what about all the other kids that were in your class in school? the ones who didn't accept, the ones who didn't see things right, the ones who said, no, I disagree with that. All those more lateral brains that thought differently, not only were not rewarded, but they were degraded, besmirched, humiliated. Now, as you get older, you realize that there are hundreds of types of intelligence, not just one, hundreds. But in school, we only rewarded one. And as a result of that, there are, I'm sure the same as in South Africa, thousands and thousands of incredibly clever people who left school feeling very stupid. But the corollary is also the case. There were many, many quite stupid people who left school feeling very clever. Now, the reason this is important is because I know I teach in university, I get these types of kids who come in and they've always got great grades. They've got very good linear brains. They've very good conventional brains. They do great in exams, etc. Right? But something strange happens in society. We reward these type of thinkers. And then they leave the university and they go on to do a master's, or they join the graduate trainee programs in the big banks and the asset managers and the finance houses and the civil servants in the tech companies, etc. And something strange happens in careers. These types of people go up the greasy pole, and during the interview process of getting a job, they are interviewed by the same type of people who are just a generation older. And we think in psychology that we like to surround ourselves as humans with people who think differently. It sounds better, don't. We surround ourselves with people who think the same as us. It's called confirmation bias in psychology. We like people who confirm our biases. Now, what this means in society is that people whose brains are rewarded in school go to interviews with people whose brains were also rewarded in school, and they identify and see themselves in each other, and they give each other jobs. Imagine, so the interview process in big companies is a little bit like Tinder for people who can do algebra, okay? What this happens is it means that we end up with very similar types of brains running companies. And that gives us something called groupthink at the very top as these people move up. And the problem with groupthink is it's very, very difficult in groupthink to see beyond the group. The other problem is that if you are the sort of person who has done very, very well in college and university and exams and academia, and you've always been right, it's very, very difficult to be wrong. But we know wrong is the only way in which you learn. Because when you're right, you can't learn because you know the stuff. So the whole process of learning is acknowledging that you're wrong in the first place. But if we have people who've never, ever, ever imagined that they could be wrong, who define themselves by always being the brightest at the top of our institutions, our investing institutions, our economic institutions, our banking system, our finance system, then groupthink leads to massive mistakes at tipping points when you need the unconventional thinker. This is something I want you to start thinking about before we talk about the global economy. I'll just give you a quote from a great economist about conventional thinking. J.K. Galbraith, Canadian economist. The Americans pretend he was American because he was very good, but he was actually Canadian. Observed one thing about conventional thinking. He said that when faced with the choice between changing his mind and finding the proof not to do so, the conventional man always gets busy looking for the proof. Now, that is critical. So the first thing I would say to you, all of you, wherever you're watching, whether you're watching in Durban and Joburg and Cape Town, out in the countryside, wherever, is open up the possibility of changing your mind. Because if you change your mind, it is a sign of strength, not weakness. And that means breaking away from the crowd. That means thinking unconventionally. Just remember, think like a poet, less like an economist. Number one lesson. Number two lesson is all this has happened before, and the key thing about crisis is not the crisis itself, but how we react to the crisis. So that's the first thing I want to talk to you, and I want to put a lot in your head. Now, let's talk about a little bit of economics, cycles, policy, events. Again, as I said at the very, very top, most economists will come here and say, 2025 is going to be like this. I actually don't care about 2025. It doesn't interest me. What I care about is where the world is going and where we've come from. And as I said to you at the top, I think the reason 2025 is interesting is it is a hinge between one world and the next world. Now, I like to see the world in what I call large super cycles. Super cycles are when economics, politics, democracy, demography, and ideas tend to coalesce around one big idea. So, for example, I happen to think that we are just coming out of a period of around 30 years where the world moved broadly in the same direction. So let us start with the fall of the Berlin Wall in early November 1989, 1990, and let's go up to around today, 2025. So what we're looking at is a 30-year economic cycle, political cycle too. We might even divide it into two bits, a 35-year cycle, two 17-year bits of it, okay? Now, what do I mean by this great cycle? I mean, the end of the fall of the Berlin Wall is the end of the Cold War. It is the end of the rivalry between Russia, the Soviet Union, and the United States. It marks the end of communism in Eastern Europe. It marks the arrival after Tiananmen Square of China onto the world scene. China, in effect, when you actually think about it, increases global workforce by 20%, which has profound implications for initially manufacturing and now the services industry. India comes into the world. The Indian workforce comes into the world. It's also a period of old regimes collapsing. So, for example, I don't have to tell you as South Africans that the old apartheid regime begins to collapse and the ANC emerge again as a power in around 1990, 1991 with the release of Nelson Mandela from Robben Island. And the rest, in South Africa's history, you've had a 35-year period of broadly ANC government, and now you don't have that anymore. So South Africa, in fact, fits snugly into this notion of big super cycles. But from an economic perspective, what else is going on? It's an era of smaller governments all around the world. It's an ideological era which we term neoliberalism. Smaller governments and the Chinese impact on inflation brings down wages, brings down inflation. Again, not exactly the same in every country, but as a general observation about the global economy. As inflation falls, interest rates fall, and as interest rates fall, what goes up? Asset prices. So the global economy booms over the last 30 odd years, doing extremely well. China, of course, being the big story, but everywhere does reasonably well. However, it does reasonably well, but, and this is a big but, after 2008, so you've got the first 17 years, which is the world is opening up, okay? 1990 to, let's say, 2008, 2007. After 2007, 2008, and the collapse of asset prices, the global financial crisis, which in itself was a function of the lower interest rates, easier credit, bubbles, etc., we get QE. And QE doubles down on the policy of reducing interest rates in order to reflate the balance sheet of the global economy, Why? Because the balance sheet of the global economy is destroyed after the collapse of the housing market and the banking market in 2008. But, and this is the big but, what do you think happens when you reflate the economy using increased asset prices as your major way of refloating the balance sheet? What happens is asset prices go up. So, who gets rich? Rich people or poor people? Rich people, of course, because they own assets. So what we got in the second part of this 35-year period was a bias in economic growth, towards the existing and already wealthy. You combine that with austerity, which tends to affect people who depend on the state more, who are the poor, and what you get is ever rising levels of economic inequality. Now, what that leads to is a bizarre situation where you can have economic growth, but you don't get democratic peace. Now, why is that? It's because the fruits of economic growth are going to those who own assets. So you can divide the economy into two types of people. The people whose income derives from assets, rents, dividends, wealth, increasing share prices, etc. That's one sector. And the people whose income derives from wages. Now, what do you think? What is the greater proportion of society? People whose income derives on wages. Now, of course, if those who have asset prices get very rich and those whose wages stay here, you're going to get this inequality. Now, what that leads to in democratic societies is a situation where the electorate in Europe and America, which we're going to get onto now, splits not between left and right, or young and old, or country people and city people, or liberals and conservatives. No, it splits between those people who have a stake in society, whose wealth is rising, and those people who have a smaller stake who feel their wealth is diminishing. And it splits, therefore, not between left and right, but between insiders, those people who have influence, and outsiders, those people who feel they have no influence. Now, they might not necessarily have a stake, but these people have a vote. And in democratic societies, they vote for the guy or the guys or the parties who tell them, I feel your pain. I understand your dilemma. I'm with you. People like Donald Trump. People like Brexit in the UK. People like Le Pen. People like Maloney. People who are dismissed by the liberal elite as populists, but are actually the people who are in tune with the population. So what you can see is that great third period, which started with globalization, which started with the promise of more democracy, which started with the idea of neoliberalism, which was very successful for a long, long time, has now run its course. And it has been replaced at the ballot box, not by people who embrace globalization, cosmopolitanism, the free movement of goods, the free movement of people, the free movement of capital, but by people who say, no, we're going to stop immigration. We're going to stop the free movement of goods. We are going to introduce tariffs. We are going to penalize the Chinese. We are going to slap on all sorts of bureaucratic quotas. We are going to protect our own people. We are going to move from internationalism to nationalism. That is the big change we are seeing in the year 2025, most splendidly evident in the United States, but also all over. So we're moving from a world of smaller government to bigger government, a world of lower inflation to higher inflation, a world where, and this is very important, where bond markets were broadly supportive of government policy, to a situation where bond markets are broadly, I'm just saying broadly, wary of government policy. The bond vigilantes, those bond investors, are no longer prepared to accept the promises that governments are suggesting. Don't worry, inflation will be fine. They're saying, no, I want higher interest rates. I want to be paid for risk. So we are moving into a world which is totally different from the last world. And just to give you your context, if you look at the world since the Second World War, there was a period about 1945 to around 1985, okay? This was a period, let's say 1945 to about 1980. This is a period of big government, managed trade, reasonably high levels of inflation. Then we go into a period of smaller government, Reaganism, Thatcherism. Then that leads to the end of communism. It leads to the end of the Cold War. It leads to all the good stuff we've seen the last 30 years. But in its own success or the seeds of its own destruction, inequality. Right now, we are moving into this new world, what I would describe as the MAGA world, okay? The world of Donald Trump. So what does that mean for us? So in the United States, we have a new philosophy called America First. Now, America First is just simply a nativist movement. It's a nationalist movement. Tariffs, number one. Throwing out 12 million illegal immigrants, number two. Tearing up all sorts of international agreements, starting with climate change, number three. Suggesting that the United States will throw its weight around, number four. In geopolitics, going from negotiated peace to what Ronald Reagan described as peace through truth. So it will be the United States ramping up their military spending to try and match the Chinese in various logical areas. Reagan did that with the Russians in the early part of his presidency. Trump will try to do this with the Chinese. What does it also mean? It means that America becomes more and more and more isolated or isolationist. Now, they can do this because they are blessed by two large masses of water called the Pacific Ocean and the Atlantic Ocean. The Americans are self-sufficient in energy. They're self-sufficient in food. They have the technology they need. They have largely decent neighbors, even though they've actually decided to have a go at both of them, Canada and Mexico. They can live broadly in peace if they want to, which is the isolationist tract. I'm not sure the Trump way down there, but it is changing profoundly. That's the first thing. But the second thing to observe about the United States is underneath a lot of this strength, machoism, the sort of what I call the brotocracy. We've gone from a kind of a democracy to a brotocracy, which, Elon Musk and Zuckerberg and all those things. Elon Musk, the gift that South Africa gave to the world. Anyway, the point is we are moving into a new America. But I think there's something to watch here for us as investors, and it's the following. I think that America, although incredibly strong, has two very, very fragile points. And they're both evident in financial markets. The first is the Magnificent Seven. So the Magnificent Seven, Apple, Amazon, Meta, Google, Microsoft, Nvidia, and Tesla. Okay? Great companies that bet on the future. At the moment, those companies constitute 37% of the S&P 500. So 7 companies amount for 37% of the value of 500 in the index. Have we ever seen this before? No. Have we ever seen such a concentration of bets on the future in 7 companies? No. Have we ever seen such an extraordinary concentration of wealth? No. Have we ever seen such a lack of diversification in the portfolio? No. Now, what does that mean? I'll give you another statistic, right? Right now, the United States stock market, constitutes 70% of the value of the global stock index. Okay, so the MSCI, 70%, and yet the United States economy is only about 21% of GDP. So a huge amount of the world's wealth is concentrated in the United States. Is that a problem? Well, the economic historian in me would suggest that when you see this level of concentration in a number of companies, what you are in is bubble territory. Now, not necessarily that everything's going to collapse, but you're in bubble thinking. And what is bubble thinking? Bubble thinking can probably be best described as FOMO, the fear of missing out. So everybody wants to own an asset. Why? Because everybody else does it. I've always said to my students, why do you think people buy things? People buy things because other people buy things. Why is that? It's because we humans are driven by collective psychology. We are a social animal that tends to copy each other. In fact, one of the greatest assets that humanity has is we're the world's best imitators. We see things, we imitate. Now, what does that do in portfolios is we copy portfolios. So we become concentrated in a sector or a number of sectors that everybody else is concentrated in. Now, what does that lead to? It leads to investment by FOMO, number one. It leads to us falling in love with the companies, number two. It leads to us thinking that things cannot ever go wrong. Why, when we see valuations of 30 times earnings, 40 times, 50 times, what we're actually buying is a 40-year risk where we believe that Nvidia or Microsoft or Apple will lead the sector for 40 years. Have you ever compared what the top 20 companies were in the S&P 500 even 20 years ago with today? Of the top 20 years ago, there's only 5 companies remain today in the top 20. What does that mean? It means that the disruptors get disrupted. That permanence is something we don't basically take for granted in finance and in corporate behavior. What does that mean? It means that I think there is a significant risk that what is happening in the Magnificent Seven is what we would call in the old days a bubble, characterized by bubble thinking, predicated on everything going right, predicated on investors who are simply there because everybody else is. Number one. Number two, on the bond market, the bond vigilantes are back. Bond prices are falling. Bond yields are rising. We're seeing this all across the world, led by the United States Treasury 30-year yield rising. What does that mean? It means that people are worried about debt. Debt in where? Debt in the United States. The United States debt to GDP ratio about 100% of GDP, but $31 trillion with Trump's tax cuts, etc. Unless we get massive economic growth, we're going to see profound deterioration in the external position of the United States. Why? Because the United States depends on the rest of the world to finance it. Probably got a net asset hold of about 13 trillion. So, yes, America First will change the world, but just be aware of those two risks and keep your unconventional thinker's hat on. That's America. Europe. As a European, well, Ireland is kind of half European. We're kind of half European, half American, but we're citizens of the European Union, etc. I worry about Europe profoundly. I worry that America innovates, China produces, and Europe regulates. So take it again. America innovates, China imitates, and Europe regulates. You don't really want to be in Europe. We have been made wealthy over the last 30 years, go back to that other cycle, where we thought we could depend on Russia for cheap gas. We thought we could depend on China for ongoing demand for our products, particularly our gas. And we thought we could depend on America to constantly and forever pay our defense budget. Now with the war in Ukraine, now with America First and MAGA and Donald Trump, the Americans have said, we ain't going to pay. The Russians can't supply us with gas because they're under sanctions. And the Chinese demand isn't where it was. Why? Because China has imitated and replicated and beaten the Europeans at their own game, most particularly evident in the collapse of the German car market. So we are in trouble. We're old. We like our lifestyle. But more importantly, we are now terrorized by, or at least traumatized by, immigration. What you're seeing in the elections in February in Germany will be the emergence of the AfD, the Alternative for Deutschland, again, Elon Musk's mates in Germany, right wing. They believe in what's called remigration, which is the re-migration of immigrants, so basically kicking people out. We have Le Pen, probably going to get the French presidency next time out. Macron, a lame duck. Geert Wilders in Holland. And of course, the star of the show, Meloni in Italy, who is the fascist that everybody likes. Again, Elon Musk seems to like her a lot. My point is, Europe is going the way of America. We are going down the route, which is a route away from the last 30 years and into something that looks, feels, and seems a little bit like when Yeats was writing 100 years ago, the Europe of the 1920s, where we're going from liberal democracy to something a little bit more dangerous, a little bit more defensive, a little bit more Europe first, a little bit more let's put up all sorts of barriers to immigration, a little bit more we want a bigger state, we want protection, we want security. All these factors are not good for economic growth in the European Union, but for cultural reasons, the European Union is highly, highly likely to go down this route. Next up is Britain. Just across the road, if you look out the window there, is the Irish Sea, and then about 50 miles across the road is the UK. I think this is the year that the UK will enter an IMF bailout. I think the United Kingdom is going bankrupt. I think the United Kingdom has a massive productivity problem. I think it looks and feels and smells like the Asian tigers before 1996, 1997. And I feel that the end game for Britain is the incipient problems in its gilt market now, which we're seeing, and its currency now, will lead to a currency crisis within the lifetime of this Labour government, and it will be followed by an IMF bailout, the likes of which Greece suffered, as too did Ireland about 10 or 15 years ago. Ireland recovered dramatically, very, very quickly. Why? Because we had a manufacturing industry, which is based largely on American companies, but it was here. I think Britain doesn't have any industry. It has a finance industry, which is now low productivity, low value, is losing its potential. In fact, it's really just an adjunct of Wall Street. I think Britain is highly likely to go into an economic tailspin characterized by a run on both the currency and the gilt market, and it will end up probably in an IMF program, and its recovery from austerity will be more like Greece than Ireland's, which means that you're looking at a 5 or 10 year period of soul searching. Again, the major party in the United Kingdom that will profit from this is the Reform Party under Mr. Farage, again, a right-wing nationalist party. And I think this is almost a slam dunk. That's Britain. The big story for the next 10 years is still the relentless, relentless rise of Asia. Relentless, impressive, deleterious to European and American wealth because our manufacturing bases have moved there. I'll just give you one statistic. Americans go on about the car industry. The Americans produce 3% of the world's cars. The Chinese produce 36%. So it's over. So all of the angst in Europe has got as its explanatory factor, the relentless migration of capital, of ideas, of technology, and of firepower to Asia. That is going to continue. People worry about China. If you look in the last 5 years, global trade increased by 3%. Chinese exports increased by over 30%. There is no problem in China that cannot be solved within China at the moment. So I think that story remains the same. And then finally, before we go, Africa. Now, it's very, very clear that demography is destiny. When you have a large rising population, you have the potential for strong economic growth, for innovation, for consumption, for all sorts of things. I'll give you one statistic about Africa, which you Africans will be well aware of, but last year there were more children born in Nigeria than were born in the entire continent of Europe. And by that I mean going from Galway in the west of Ireland all the way to Vladivostok in Asia. We're basically including the Russians as Europeans. So the game is up for us. We're not having any children. There'll be more Nigerians. Think about by 2070, which is not that far away, half a lifetime, maybe a little bit more. 7 out of people in the world will be African. Think about that. So the massive growth comes in your continent. It comes in your backyard. And of course, South Africa is the second largest economy in Africa, stands to benefit enormously if policies are right, if you get a bit of luck, if you get a bit of fair weather. And I don't mean fair weather as in cold and hot. I mean fair background noise. And if capital flows out of Europe and America and Asia. Remember, the Asians are also aging rapidly. The Chinese are aging rapidly. The Chinese current account surplus will be recycled into, not America, because the Americans are at war with the Chinese, but into more friendly places. And one of those places will be Africa. Now, just before we go, in the next 2 years, emerging markets will have a difficult time. Why? Because the American bond market will be rising. Tariffs will affect producers of goods into the United States. And as a general rule, the background noise towards emerging markets, of which South Africa is one, will be very challenging. But longer term, you don't have to be a genius to figure out that the future is not going to be up here in this part of the world. It's going to be down there in your part of the world. So let's just recap. Number one, history tells us crises repeat themselves. Number two, it's not the crisis is the problem, it's how you react to the crisis. Number three, how you react to the crisis is dictated by how you think about the world. And right now, we need to embrace the non-conformist, unconventional thinker in your office, in your team, in your company, because those people see the world differently. The reason 2025, number four, is a big issue is it's the hinge year between one super cycle, 30-year super cycle, which started with, if you're South African, the emergence of the ANC, the end of apartheid, or if you're European, the end of the Cold War, and of course, if you're American, the end of the Cold War as well. That is now was an amazing time for financial markets because it was driven by reduced cost of capital, which made asset prices rose, but that created inequality, and now we're reversing. We get more nationalism, more America first, more Europe first, etc. Europe will muddle through, but we have a serious, serious problem, animated by the problem in Ukraine. We hope to get a ceasefire there, but who knows? Britain is on its own, I would say, position. And finally, the upshot for Asia is that Africa, over the course of this new super cycle, will benefit like no other region in the world. So thank you very much for listening to this worldview from Ireland. And I'm now going back to studio in South Africa to Alicia. How are you, darling? All good.
Good, thanks, David. I had to creep in there because, time is not on our side. We could listen to you all day, but we've got loads of questions that have been filtering through as well. So I want to jump into as many of them as we possibly can, in the time that we do have left. And I'm going to start off, David, with a look at, an American industrialist, J. Paul Getty, who made an assertion a while ago saying that in times of rapid change, experience can in fact be your worst enemy, right? So in this instance, as we sit and talk to an asset management industry here, the thinking is those that stick to their long-held valuation disciplines are in fact getting left behind. So given what you've outlined, with 2025 perhaps being the most consequential here in our lifetimes, but that history repeats itself in reasonably predictable ways, what's your view on that?
Well, I think, it's very, very difficult to go against John Paul Getty, one of the greatest innovators the world, particularly the late 20th century, has ever seen. I think that there are two things going on. One is clearly the technology, the people who bet on technology win at the end of the day. But our problem, Alicia, is everybody bets on the same technology, and that's a problem. The second thing is that you cannot get away from the relentless idea that human psychology is something that we can map quite clearly, which is that at the moment, I get the impression that everybody is following, we're all the herd and everyone's following the same game. And I think it could be quite important in a world where valuations are very stretched to maybe hold a little bit of cash and wait to see what sort of opportunities present themselves over the course of the next 12 to 18 months. That's what I'm doing personally.
Yeah,
and I think that's...
I love that you end on opportunities there because, we talk about the shifts that are taking place, really putting forward and on the table a host of challenges, but they can create new opportunities as well. And so investors find themselves at this, pivotal juncture, David, where careful navigation is required to actually mitigate the risk and manage the risk on the one end, but capitalize on the opportunity on the other side as well. What opportunities are you seeing right now that simply cannot be ignored and need to be leveraged off?
Well, I think the first thing is look at the economic cycle. Look at what I was talking about. We're going into this new world, right? It's a new world where the price of capital is going to go up. So you have to be much more discriminating about where you put your money, in the sense that the penalty for mistakes is going to be higher. But if you look at the world of technology, if you look at the world, for example, what I was so intrigued by was the way in which TikTok was banned in the United States and another TikTok emerged straight away. So I would say, listen to your kids, okay? My children speak a different language to me, but they're spending money in a totally different world. I would say to all investors, listen, sit around at the kitchen, listen to your kids, see what they're doing, and follow that money, because that's where the future bonanzas are coming from.
Good tip there. And I'm going to squeeze one more in, David, because I want to bring it back to Africa very quickly, right? Because we talk about emerging economies themselves. You mentioned America innovates, China manufactures, or imitates rather. So it's America innovates, China imitates, and Europe regulates. Where does Africa fit into all of this as we move forward? And I ask you the question because for emerging economies themselves, you've got this diversification drum that's been beaten for the longest time, saying that's how we mitigate against risk. That's how we reduce vulnerability to external shocks, right? And I know we've just chatted about new opportunities, but what African economies that are doing at the moment is jumping, it seems, from one commodity chapter just to the next, looking to leverage natural resources, for example, oil, gas, minerals that can provide economic opportunities, during this transition that we're seeing. Is there an inherent risk now that comes with that?
I think that Africa, if you look at the history of economic development, whether it's the Industrial Revolution in the United Kingdom all the way through to what's happening now, countries have to make stuff to get rich. There has to be a manufacturing lift-off, and that's precisely what happened in China. I'm speaking to you from a country, Alicia, that was incredibly poor when I was a kid. It's now very rich, Ireland. How do we do that? We got in American manufacturing. How do we get American manufacturing in? We didn't tax it. We gave it a tax break. If the Irish can manufacture, anybody can, okay? I can tell you that, right? So I would say that what African countries have to look at is how do you get involved in the manufacturing business? How do you get the discipline of systems involved, manufacturing processes, all those things that come with foreign capital? Do it very gently, open up little bit by little bit, provide supernormal profits for American investors. And I say America because they're the
Yeah.
only people who take risks, right? And I think you can do it. It just needs a plan. How can the continent, which is going to be the most populous in the planet, on the planet, it cannot remain underdeveloped indefinitely. It just needs a plan, and not a big plan, small plans.
Absolutely. Well, David, it's been so great listening to you today. We're going to have to leave it there at this point because time, like I say, has not been on our side today. But to all of you that have been watching and listening to David, if you'd like to hear more from David McWilliams, he will be chatting to Allan Gray's Chief Investment Officer, Duncan Artis, on the Allan Gray podcast in the next few days. And they'll be exploring these themes and many others from the latest bestseller, Money, a Story of Humanity. Follow the Allan Gray podcast on your preferred podcasting platform to be notified when that episode becomes available.